I mean, this is an ongoing, unsolved issue. It's a highly complex situation. I think you know it better than I. And I don't know what the solution is going to be there, if there is any solution. I assume that this is going to intensify over the next few months and very likely years and probably even months, yes.
Hello and welcome to Crypto Street, where we bring you the latest and most intriguing stories from the world of cryptocurrency, investing, and economics. Now let's begin our enlightening discussion with Florian Grummes.
I think it's important to remind ourselves that after the financial crisis in 2008, it was China that basically pulled out the West from this very miserable situation, and the growth in China helped the West to come back on its feet. And this was also massively driven back then by investments from Wall Street into China. And nowadays, we have a very challenging geopolitical setup, and it's not as easy as it was back then to do business with China anymore. It's also important to understand that the lockdowns in China were much longer and much harsher than in the West. And they have led to much greater unemployment, and I think also damaged the psychology much stronger. And I mean, the situation in the West is not very good given the high interest rate environment nowadays. And now you have China going through, I think, a crisis that started 2 years ago. If you remember, back then we did an interview talking about the crashing real estate environment, and we talked about the ghost cities in China, basically, which were one of the effects of all this money coming to China, going in, being channeled into properties and real estate projects that didn't really make sense. And now you see, of course, that in a rather controlled, centralized, socialistic kind of economy, it's very difficult to get back on its feet because the swarm intelligence of the free market is missing. That is something that has helped the West over the last 2 years to come back on its feet. This is missing in China. You have local governments trying to control everything, and you have Beijing trying to control everything. But I think the problems are severe. You hear that the shadow banking sector has severe problems. I think we can name it. It's deflation in China, and the problems that started with the imploding real estate bubble are getting more and more severe, and that has consequences for the West because imports from the West are falling, and usually in such a case, you will hear the warmonger sound louder and louder to basically distract from internal economic problems. I think we are now hitting the so-called sticky part of inflation. It will be difficult to bring down these numbers much further unless you completely destroy the confidence in the markets, which then will lead to a massive crash, which they also don't want to have. So, and at the same time, you see like countries like Saudi Arabia are demanding high oil price. Oil has recovered nicely over the last few weeks. So, and one of the main key drivers nowadays, I think, is just that people are not willing to accept low payment for their work anymore. So that's something that, first of all, it's very difficult to get good people or people at all willing to work. And if they want to work, they want to, and demand a high salary. And that has definitely caused partially this inflation that we have seen over the last 2 years, and that will remain sticky, and this is not going away. And wherever I turn my head personally in my own life, I can only see rising prices. Everybody's rising its prices, and nobody's willing to lower prices. So I don't think that we're going to see imported deflation from China anytime soon. But what we're going to see is this rather a remaining inflation on a level, I would say something between 3 and 4%, and diminishing growth or actually severe growth problems.
Don't forget to join us as we explore the unfolding events. Let's dive into some topics and then back again to Florian. Xi Jinping, Vladimir Putin, advancing China-Russia strategic partnership, says Chinese official Russian ruble plunges to 16-month low versus the US dollar. Experts cite oil price cap. Former SEC official anticipates exponential shifts in crypto regulations after Election Day. Bank of America assesses significance of PayPal's USD stablecoin and FedNow system. Europe's first spot BTC ETF launches on Euronext Amsterdam.
If you look at the stock market, I think we have seen a top just 2.5-3 weeks ago. Interestingly, exactly on that weekend, there were sentiment numbers showing like extreme greed and optimism among the so-called dump money, the retail money. Everybody was in the stock market. The AI boom had driven prices in the sky, and now we have a turnaround. I think we've seen the top, and people have been talking for nearly 9 months that there is a crash coming, and they've been most of the time super bearish. Last interview that we did, I said this is actually a contrarian signal, and the markets will move very likely higher just because there's so much fear in the market. But this fear has gone, and now we've seen actually the opposite. So if the markets would now typically also remember seasonality into September is weak, is actually the weakest month of the year is September. So if markets continue to pull back and start to correct, this can definitely move into a deflationary move if markets really start to crash. I don't see a crash right now, but we also have to be clear here. The Fed and Mr. Powell seem to still believe that they can manage and maneuver and control this highly complex economy by raising or lowering interest rates, which I personally believe is totally absurd to believe in, because the economy is too complex for a group of a few people to understand what's actually really going on. And I think that they totally overestimate their hand right now, and they're on the way to destroy it, because these high interest rates, I understand that it makes sense and they're trying to save the system, but I think that it's way too late and you cannot save that system anymore. And I think they are on the way to break something again, similar like what we've said about a year ago. Finally, it happened in March when a few banks went bankrupt and you had a bank run in America. And I think we're going to see something else, most likely out of the commercial real estate sector in the next 6 months. And that it's all a question of psychology. And if people freak out and get really afraid, then you can also have deflation, right? That can happen, yes.
What's happening in the crypto market? Let's take a quick look at those technical analysis. Traders believe that Bitcoin's low volatility is a bull market signal, but their bias could be preventing them from acknowledging potentially negative macro outcomes. The latest report from Glassnode Insights, titled "The Week On-Chain," emphasizes that Bitcoin has reached historically low levels of volatility. This has led to a mere 2.9% separation between the asset's Bollinger Bands, indicating an exceptionally narrow trading range. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.